Hey there, listeners. Thanks for stopping by to the podcast today. Please, before you're done listening to this episode, leave us a review. If you're on Spotify, you can review now, and you can also review on Apple Podcasts. But if there's any platforms that I'm forgetting about and you can leave us a review, please do so. If you're happening to watch this on YouTube, and if you don't know, you can watch these podcasts on YouTube now, please like and subscribe to the channel and share the episode as well. So thanks for stopping by, everybody, and enjoy the episode.
Knowledge is Power is where you come to hear people's life experiences to learn from. So, without further ado, let's roll the intro.
Stay hungry, stay foolish.
We choose to go to the moon in this decade and do the other thing, not because they are easy, but because they are hard.
I have a dream. Will one day live in a nation where they will not be judged by the color of their skin, but by the content of their character.
Hello and welcome back to the Knowledge is Power podcast. This is your host, Maxwell. We got another great guest on for today's episode. So if you could go ahead and introduce yourself, that would be great.
Absolutely. Thanks. I want to say thanks again for having me on here. So my name is John Bellemore. I am the producing sales manager for Embrace Home Loans in our only retail location in Rhode Island. The company itself is quite large. We're nationally licensed, have 60 or 65 branches across the U.S. I've been with the company for going on 8 years now, and I'm happy to be here. Yeah, it's an exciting time.
Yeah, very cool. Well, it's great having you on. You are the second mortgage person, I guess, mortgage guy I've had on the podcast. But the last time I had somebody on was almost 2 years ago now. So obviously much different market than it was 2 years ago. And we're going to get into mortgages later in the episode. But to start off, why don't you tell everybody your life story and what brought you to where you are now being a mortgage lender?
Sure. So life story. I mean, I guess we can kind of start off with, Rhode Island and, geographic and stuff. So I grew up here in Rhode Island, in North Kingstown. As I mentioned, I'm working in East Greenwich, so it's pretty close to home. I have kind of bounced around all over the place. So, born and raised in Warwick, moved to North Kingstown in the late 80s. We were living underneath TF Green Airport, essentially. And so every 5 minutes, a plane would be taking off or coming back down. And, it was a running joke in the house where everybody knew if you were on the phone, you'd have to put the phone away for 30 seconds until the plane landed, and then you can come back into the conversation. Nobody ever skipped a beat. It was pretty funny. But yeah, so it was just too noisy and we wanted to get away from that. So we moved to North Kingstown in the late 80s with my sister, my mom, and my dad. I went to North Kingstown High School. After high school, I went to college, but I didn't want to go to URI. I wanted to get a little bit farther away. And so I ended up applying to Penn State, Linden State up in I believe it's Vermont. And then also Florida Institute of Technology down in Melbourne, Florida. And that's kind of where I ultimately decided I wanted to go. So I went to college for meteorology, not the broadcast side of things, but strictly math science. And it was an amazing experience, and I've always been kind of interested in math and science my whole life. Hurricane Bob in 91, if you remember, was what really kind of got me more interested in the weather, or I think that was probably the starting point. Mm-hmm. And so that's kind of where everything took off. So I went to college for meteorology, environmental science, did that for a little bit. When I got home, from school, I didn't really know what avenue I wanted to go. So my aunt was actually working for Channel 12 with Tony Petracca, and I ended up going to intern with them. I think that must have been August of 2006, somewhere in that time frame. And I did that for about a year until I got my first television job. And so that kind of started, the whole, my whole path forward into TV, which I did for, 10 years or so. My agenda with schooling was always go to get like a research job or something in that capacity. A lot of my friends ended up doing that. But I just kind of fell into TV, and it was kind of fun when I was young, and so I ran with it. And that's kind of my life story regarding that. In terms of why I left, I always like to use the adage, most older people will know what I'm saying. Today's millennials and everything get their news from their phone 24/7. But, you would turn on the TV at, 5, 6 a.m. or 10, 11 o'clock at night. It's weekends, it's holidays. And so that's when I was working. And so that kind of explains why I left the business. It also changed quite a bit. My first job was my first real job was out in Central Oregon, which was really cool. But it was very bottom of the bottom markets. So I had to kind of work my way up. But the way that the system works is that, there's generally 3 TV stations per market. There's about 188 markets, and there's usually somewhere between 3 and 5 jobs, weather jobs per station. So if you do the math on that, there's only, there's less than 1,000 jobs in the entire United States. So it's very difficult to get anywhere. And when you bounce from a market that has a really high number, which means it's not, very low population or whatever, it's not like New York or Boston. When you jump and try to get to those higher markets for more pay, better, exposure, you have to start from the bottom. And the people that are in those positions already are not, keen on leaving unless something drastic happens. So it just was something that I made my way all the way to Westchester County. I was working for News 12 Connecticut. I was working for Fox 25 up in Boston. And it was kind of like the plateau. There wasn't really anything else that I could do to, further that career unless I became the chief. And that was probably going to take 25 years, and that's not anything that I wanted to do. So I ended up leaving that. I moved back. I was in Rhode Island at this time. I was actually in Newport, but I started to work for a software as a service company, which got me into sales mode. And so that kind of transitioned into, I like sales, but I don't like what I'm doing currently with it. And I knew a friend. I was like, I was living in Newport, driving down to, Wyoming or Hope Valley, Rhode Island. And every day was, an hour each way. It was just like something I didn't really want to continue to do. I had done that for 5 years. So I wanted something closer to home. I was talking to somebody who worked at Embrace Home Loans, and they said, why don't you just apply and see where it goes? And so that's the story. I did that in 2015, made my jump from, a W-2 salaried position to something that was essentially all commission. It was a really big decision, but I'm glad that I went and made that jump. So that's kind of my life story. And now I'm here.
Yeah. Well, that's a great life story. Very interesting to go from, being a weatherman to mortgages, which is pretty cool. But yeah, I mean, let's talk. All right. So I got to ask this question, right? And I'm sure you get this question a lot when it comes to being a weatherman or being on the news or something like that. How accurate is the movie The Anchorman?
I think that for the 70s, probably pretty accurate, right? When I was there, it wasn't as bad as, I guess, as they make it seem like,
Yeah. So there weren't battles in fields in the cities with futuristic guns and between rival news networks.
No, but the funny thing is at least at my first job in Central Oregon, it was a brand new station. So the station didn't exist before. It was just NBC. And when that was the existing, I think they called, I don't remember what the call sign was, but it was an NBC station. And the station that I joined, they literally built the building, bought the advertising and broadcasting rights, and they hired a crew. And then boom, one day a new station was up. So the NBC station didn't like that, right? And so there was a bit of back and forth that went in that scenario. But I would say generally, everybody was pretty easygoing, especially as you start to get into the bigger markets. When I was working in, the greater New York City area, Southwestern Connecticut, over up in Boston and stuff, everybody knew each other. They generally were, they were hanging out. They all went to this, did the same things, and it was pretty kosher. Everybody was getting along.
Yeah. And did you say when you were out in Oregon, what was the company you worked for out in Oregon? Was that Fox as well?
No. So I kind of bounced around a bit. the company in Oregon was KOHD. It was an ABC affiliate.
Okay.
I actually don't even think they're there anymore. Which is sad.
Interesting. Was there a difference like in company culture? Like, because obviously, like, it's very different from national news and whatnot, right? Just from watching from the outside in. Is there like a difference in how the companies sort of run on the back end that you saw from like the ABC affiliate to the Fox one?
I don't think so, but also keep in mind that I wasn't in the reporting side of things.
Yeah.
Right. So there wasn't any sort of like, when you watch TV today, ABC, NBC, Fox, I don't want to say there's an agenda, but there's a lean to you kind of choose which station you like because there's a sort of a lean.
Mm-hmm.
I didn't experience that because I wasn't really doing a whole lot of the reporting.
Yeah.
Weather is weather, no matter where you go. Right. And so that was my world. And I kind of stuck with it.
Yeah. Well, I think the great thing about the local channels is you don't get that as much, with the lean. Like you might see it occasionally, but it's not as glaring as it is on a national level, because there are people that, in Rhode Island that live 30 minutes from you or less, you know what I mean? So like, it's more of like a local feeling, you know what I mean? And I think it's like, listen, I'm 21 years old. I do actually sometimes will get up and turn on the news in the morning, Not a lot of kids my age do that.
Yeah.
Yeah, I think that's pretty amazing. So can you explain like the process? So your routine, like when you got into the office, when you were working in that industry, like what went on, from when you got there to when you're on air. I'm curious to hear that
when
process.
I was doing the weather stuff?
Yeah.
Oh, geez. So it was it was early. I would normally work the shift it would like be 2 to 11, right? 2 in the morning to 11 in the morning. So I would get up, be at work by 2:30, something of that nature. We were online or on air at, I want to say it was 5 when we first started, and then it dropped to 4. So it was very early in the morning. But I would get in and I would look at all of the computer data that was coming in. So each station has proprietary systems that, at least back in the day, I don't know what it's like now. I've been out of the game for a while, but back in the day, you would have these, a station would buy a certain service provider's data, right? It's like anything else. You could buy your base data, but then if you want lightning on top of that, it's an extra package, like it's an extra add-on. If you want to have your own radar, that's an extra add-on. So there's things that you have to purchase. And if the station doesn't have money to do so, then it may be a slim package and you get a slim report. But what I generally did was I went in and I would be looking at all of the data from outside of what we purchased. And then I would look at the data from the software and systems that we did purchase. I would make my own forecast, and then I would see what the forecast was from the automated systems. And if there was something that I missed, or if the thing was interpreting something a little bit differently, then I can kind of massage what I wanted to put out into the world. I also looked at what my teammates were doing the night before and earlier in that day, because, generally speaking, weather is trending, right? Moves from the western side over to the eastern side. That's just kind of how the systems work. In Oregon, it was a little bit different because we don't have radar across the ocean. So I was right up against the Cascades. And so I wouldn't see weather on radar come until it hit the coastline. A lot of the radar that was in Central Oregon would have to go up and over the mountains before it actually saw anything. And so if there's a low level storm or something like that over in Eugene or Portland, I wouldn't really see that unless I was using their systems or their radar. And so it was very difficult to really get the computers to read it accurately. You would have to know based on where you were and how the mountains played into, the terrain, into topography, geography of how those storms are going to come through the mountains and end up in my local market. So it was a bit of I don't want to say a guessing game, but you really had to know how it was going to interact. And without living there for a while and knowing how the storms behave, you have to put your spin on it. So it took a little bit, but that's kind of how my morning went. I would do my forecasting, once I had my forecast in place, then it was a graphics game. Like I would have to go and make all these graphics, put all this words together, and then I have to make multiple different types of forecasts as far as like video. So most of my stuff was live. So I would go in and I would do a minute and a half, and then it would be, a 15-second bump or a tease. Then I would have to do another 30-second tease, and then I would do my 3-minute forecast. And that was the half hour, right? And you would do that from 4:30 to 5 to 5:30, 5:30 to 6, 6:30 to 7. And then we would do bump ins for GMA, which would be Good Morning America, because we were an ABC station. So that's kind of how the morning went. After that, you were generally helping the midday and the evening meteorologists to get their stuff ready to go, and making sure that your information was accurate and easily accessible. When the station started to collapse in, say, 2009 or so, that's when they started to, like in 2008, when the housing market crashed and it was just like kind of really bad. Everybody started to lose a whole lot of money. That's when they started to turn everybody into what they deemed as multimedia journalists. So I started off as the Monday through Friday morning weather guy, right? I was the weather anchor. Then I was the morning weather anchor, and I was also doing the news anchoring, right? So I would jump from doing the weather. I'd have 30 seconds to breathe. Then I'd have to go over and sit in the anchor chair and read next to a co-anchor. And then when all that was done, I'd have to go and I'd have to do a story, so I would have something for the afternoon that I recorded in the morning. It was really, really bad at the very end because everybody was doing everything with very little support.
Interesting. I'm curious to hear also, like, so the data you had to collect, like, for the temperature, right? How would you guys predict like what the temperature was going to be throughout the week? Was it mostly data based off of like weather in the past, or like, because obviously you can read the temperature what it is right now, but how do you guys predict what it's going to be 15 days from now? Because sometimes you see forecasts that far out. Curious to hear how you collect that data.
Yeah, so anything that's beyond 4 days is kind of a guessing game when you try to pinpoint a temperature, right? So if you're gonna 15 days from now, you're gonna say the max or the high is 55. That's you're shooting in the dark, right? It's just not gonna happen. You can say, temperature is probably going to be in the 50s, right? But you're not going to know exactly what the temperature are. In terms of the extended forecasts, a lot of the extended forecasts all came from computer algorithms that were made by people way smarter than me, right? So it was just it was me out there determining how this was going to come about over the course of X amount of days, right? There's many different forecast models. So you would generally choose your top 3 or 5 or whatever it may be, and you would see how they all jive. If you've ever seen the spaghetti plots for a hurricane map.
Yeah, I like all the different directions it could go in.
Right. So they normally do a cone of uncertainty, right? And then in that cone of uncertainty, you'll have 20 different lines going in all these different squiggly directions. The general direction is that way, right? But some forecasts pull it right, some forecasts pull it left, 6 or 7 go right down the middle. So that's more of the consensus, right? And so when you have your 3 or 4 forecasts for 5, 10, 15 days out, you're going to have the consensus being a certain few degrees. And that's where you kind of just usually take an average, or you figure out what's happening that way. If 6 of them are saying it's going to be 50, between 50 and 56, and one of them says 75, you're probably going to toss the outlier out, and you're going to say, it's going to be somewhere around 54, right? Because 15 days out, no one's going to say, oh, you said it was going to be 54 and it was only 52, so it's just general.
Yeah, so it's almost like a scatter plot, like how you have all these different temperatures that happen on this specific date, but there's always a line going through the middle that says this is what the average is and this is what it's most likely going to be, but there was always outliers, sort of.
Pretty much.
Yeah. Okay. Yeah. Cool. All right. That's pretty interesting. I've always been interested to hear like the back end of what goes on, with anchoring and being a meteorologist. So let's go back to college, right?
Yeah.
So what sort of things, like what were the classes that you had to learn or get into when you were in college? Like what were some of the topics?
Oh, geez. I took all sorts of stuff in school. So my bachelor's degree was environmental science and meteorology. And then
Mm-hmm.
I got my master's degree from Mississippi State in applied meteorology. Um,
Okay.
that's when I kind of said, okay, I'm going to actually, when I got my master's, I think it was in 2011 is when I started, and then I got my degree in 2013. So again, this is already 10 years ago. And so I've been out of the game for a little while. But when I did that, I was really putting my foot down. I'm going to go in this head first, and I'm really going to do the meteorology thing for a while. It only lasted 2 years because there wasn't really a whole lot of opportunity out there. But as far as schooling, I had to do advanced mathematics, physics, environmental science courses. There was a lot of humanities courses in regards to, where people came from and where they're living now and how their geography affects where they're living, like coastal studies, like hydrology. There's a lot of stuff in that field that I studied for my undergrad. And then my master's degree was essentially just taking those top level classes and putting an extra spin on them, right? So now we're trying to apply these things, give us examples, write papers, show us experiments, and do these things in real life. And so that's what the master's degree did.
All right. Yeah. Interesting. What was like when you got out of college, right? A lot of guests, I'd like to talk about college. When you left college, what was like the biggest thing you left that you learned about yourself or about what you wanted to do with your life? I know that's a pretty deep question, but like, what's something that you learned that you really didn't think you would have if it weren't for college? Like, forget about like the meteorology stuff and whatnot.
That's kind of a hard question. So when I left college, what did I learn from it, I guess is
like what was the biggest lesson that you learned from college, going to college that you don't think you would have learned if you didn't go to college?
That's a tough one.
Yeah, like some people talk about how it taught them to be independent, or it made them mature, or made them realize what they didn't want to do with their lives, or different things like that.
Yeah, I liked college for the experience, right? So I guess let me preface that. I chose specifically to go to a Institute of Technology,
Mm-hmm.
which was in my head, at least, a college that I had to take really seriously, right? There was not tons of partying. There
Mm-hmm.
was, it was 85% guys. It was not something that you would go there and spend X amount of dollars to kind of waste your, I don't want to say waste your time because it sounds bad, but I specifically chose to not go to like, Arizona State, right? Where I could have, a huge party school. I could have done that. Great school, I'm sure. I don't know nothing about it, but I didn't go to college to do that sort of thing. So,
Mm-hmm.
I think that I learned from college to really appreciate the opportunity, what my parents had helped me to accomplish, because if it wasn't for them, I wouldn't have been able to do this. And I don't think that if I had the experience or opportunity to go to this kind of school, I wouldn't have, I really don't know what to say. I wouldn't have had the opportunity to jump into something that I really loved as a kid,
Mm-hmm.
and take it to its end level. You know what I
Yeah,
mean? But
absolutely.
the funny thing about Florida Tech was that they were teaching you stuff that was theoretical, right? So I would sit in my physics 3 class, and they're teaching you about theories and algorithms and stuff that were not proven. Like, for one thing that I always like to say to my friends, that I would like to go back to the school and sit in some of these classes, but not take any tests, not have to take any notes, just listen, right? And because the stuff that they were talking about was mind blowing. I remember like one of the questions on an exam was, how fast do you have to run to put a 25-foot pole in a 20-foot barn? Right? It sounds like a stupid question, right? But it all has to deal with the speed of light and how, things will expand and contract as speed goes up because of E equals MC squared type equations and that sort of thing. So like just thinking about these were like, it was really cool, completely mind blowing how smart some of the kids that I went to school, I call them kids because it was a while ago, but how smart these guys were. I mean, these are NASA scientists now. These are, engineers at all these crazy schools. A lot of like my roommate was a pilot, so he's now flying all sorts of planes and doing crazy stuff like that. So I mean, I think the experience of college was cool. It's not for everybody. I don't think that I would go and do this career path again. Just knowing what I know now, I would probably go into finance, business, something of that. Mine was more of a hobby or something that I really liked that I went headfirst in. I want to do this. I've wanted to do this forever, so I'm going to do it. And that's why I say, I'm grateful for my parents that they afforded me the opportunity to do so. I don't think I would follow this same career path again, but it's very cool to speak about. It was a great experience, but I would go into something that I think is more universal if I had to do that all over again. I hope that answers the question.
That absolutely answers my question. The big thing about this podcast, the opening tune is, the new one that I added to newer episodes is, it's where you come to hear people's life experiences to learn from. Right. Yeah. So that was a perfect answer. And I thank you for sharing that. So now we're going to get into something, what you do now with Embrace, mortgages. And we could get into a very deep conversation about all the different types of mortgages and whatnot. And I think it's a good, I think we should talk about it, especially today's market, what's going on with interest rates and whatnot. So we're going to transition to Embrace. So let's start off with the company Embrace. There's a lot of different mortgage companies out there that exist. What makes Embrace special?
So the biggest thing that I've been with Embrace for going on 8 years, and there's a reason I haven't left, right? The people here are awesome. It is what I would consider a medium-sized company. It is locally owned and operated. It was started in 1983, if I'm not mistaken, as AFS, which is Advanced Financial Services. So we started off doing, not me, obviously I wasn't there at that time, but they started off doing like second mortgages and things of that nature. And they transitioned into doing the more traditional loans, if you will, like the conventional, the FHA and everything. The FHA and these government loans were not, they generally didn't exist and weren't very popular. Everyone was doing these conventional loans back in the day. So we were one of the first ones to do that. And that just kind of gives you an idea of what we do today. We are generally the first people or first company to introduce new products. We're always evolving. We offer a lot of specialty programs that you're not going to find at other businesses. We're very competitive on interest rate. There are just a lot of good benefits here. It's a great place to learn. Embrace is, I don't want to say divided, that's not the right word, but is comprised of two different divisions. So one division is what we would call our direct consumer platform. And so if you could imagine seeing a commercial on television or on the radio or whatever it may be, you dial an 800 number wherever you are in the United States, and you get somebody in a call center who is nationally licensed to do business for whatever you're calling it out. So Embrace has that sort of a platform where we are a nationally licensed company. We have a whole building full of loan officers that are licensed nationally who will help you do purchases, refinances, whatever is needed, right? So that's direct to consumer, where the company itself advertises and then you answer the phone call. I started there. I consider that a college for loan officers. When I joined Embrace, I knew nothing about the mortgage business other than that I had just bought my first house. And my loan officer was incredible. He wasn't from Embrace, but he got me thinking about the business. because when I go and do something, I like to learn everything about it so I don't make any mistakes. I like to kind of be an expert in things that I'm trying to do. And so I was asking this loan officer all the questions I could think of. Okay, the interest rate is this, but why is it that, right? Why does this program require 3% when this program requires 5? If I move this lever, why does it move these other 3 levers? Like, I needed to know all of that stuff. And so that kind of really piqued my interest because it affected me personally. And my loan officer was so good that when my friend who was working at Embrace said, "Hey, why don't you just apply?" That's what I did. And I was like, okay, perfect. And so I started on that direct to consumer platform, and they have processors, they have underwriters in operations, then they have assistant loan officers, they have junior loan officers, and you generally would get placed on a team, and there's a team leader with maybe 10 or so other loan officers around you. You have weekly meetings about, well, I guess I'm kind of jumping the gun there. You went through about 6 months of studying because you have to pass licensing tests and do all this other stuff. You have to pass the exams. It's not like anybody can just start tomorrow, right? So I did that and learned beyond what my personal mortgage taught me what I needed to do. And then the learning environment was never ending in that direct platform. You're in I don't want to call it a call center, but you're in a room with a whole bunch of different people, and you're constantly learning, and it's a team environment. Everybody's there to help each other, and it was awesome. So that's kind of how I liked Embrace and learned about Embrace. Is they're constantly looking to evolve, constantly looking to help you out. And I got to a point where, okay, I think I know enough to kind of start this on my own. And now that's where I'm at today. We have offices all over the United States. And so I said to Embrace management and say, "Hey, I want to start a branch in Rhode Island. Let's do this." And so that's where we are today. And so now I'm actively recruiting to get more loan officers from either internally or externally to come here and learn and work with Embrace. So that's what I really like about Embrace.
Cool. Yeah. I want to talk about the process of becoming a mortgage broker as well. I recently got my real estate license. My license is right here if you're watching on camera. And I got my license in October, took the class. It's 45 hours of class. And it's really interesting. I think my teacher was great for the content she was provided and told to teach. But when you're getting your real estate license, you're really not taught a lot about how to be a real estate agent. It is a lot of verbiage and things that really you don't use. I don't know if I can get in trouble for saying this. Who knows? We'll see. Somebody tells me to take it down. I don't know. But I feel like when I got my license, I could have been better prepared with the class, right? And it seems to be a recurring case in college too. It's like you learn some things, but are you really going to use these things in the future? You know what I mean? It's not just real estate school. It's a lot of other things, like in high school, like they teach you how to be an employee and not how to do your own thing and be an entrepreneur, right? So I'm curious to hear how the mortgage, classes that you had to take and then the exam actually prepared you to be in the mortgage industry.
So I would sort of agree with what you're saying, right? And so when you take your mortgage, you're studying for the mortgage licensing tests, there's a universal test that you have to take, and then each state can apply stronger testing, right? So most of the states have the universal. And so when you're taking these study courses and everything else, it's kind of like a college class. I don't remember how many hours it was, but I studied for 6 months before I took a single test with like 80 questions on it, right? And you have to pass or you can't take it again for X amount of time. And you only get 3 chances and that's it, right? So it's pretty legit. But as far as how the mortgage world actually relates to the testing and everything, the testing is really how to stay out of trouble more than anything else.
I think that's very accurate with real estate too. You're completely right. I think you're completely right. I probably should have mentioned that as well. Yes.
Yeah. It's a lot of like, okay, if you screw up, it's going to cost you $1,000 and then it's, don't do it again. If you do it again, now it's 10,000 and it's, now it goes on your license and, who is the commissioner of the mortgage world for this state? And every state has their own nuances. And so all of those things I think are good to know. But if you're not intentionally trying to mess up or do anything criminal, I don't think you really need to know that stuff, right? It would be almost like forcing everybody to be a lawyer for no reason. You know what I mean? You only need to really, unless you get in trouble, you don't really need to know what a speeding ticket's going to cost you, right? Don't speed, and you won't need to know that.
Yeah, interesting. Yeah, that's pretty cool. Or not cool, but interesting to hear how that relates. So I
was just going to say the second half of everything which I liked better, is learning about the history of mortgages, because there's a lot of things that go into how mortgages are put together today. So the conservators, so Fannie Mae and Freddie Mac, what they mean, FHA and VA, what they are and how they help people, how they're different, how they're similar. There's a lot of history. So like, for lack of a better way to explain it, like, there was segregation back in the day. There was disparaged people that, were told they couldn't buy houses, or, they were redlined in some way, which means essentially carved out of being able to afford homes or being even allowed to buy them in the first place. So there's a lot of history that goes into that sort of thing as well. Embrace actually started a program here called Wider Path Home that will teach loan officers and anybody else, I guess, who is interested about how housing has manipulated people in the very beginning and how we're trying to change that today and make it more equal opportunity and everything. So as far as, there's there's definitely tests about how much is it going to cost if you screw up and who runs the program and everything like that. But a lot of it also goes back into really making sure that that everybody should be treated equal. You want to understand why things happened back then so we don't repeat ourselves in the future and that sort of thing. But as far as the testing, it doesn't prepare you on, like, you can't learn from a book how to sell. You have to go and do it.
You have to discover. That's something I'm discovering myself as being a real estate agent is you can watch. I've watched dozens of YouTube videos on how to, like, what to do in cold calling, what to call when you're calling a for sale by owner, or an expired listing or a withdrawn or things like that. But you sort of discover your style as you're going about what you're doing, and what works for you might not work for somebody else. For me, I'm sort of discovering, there's a lot of, I like to be straight to the point, you know what I mean? And I feel like some people would appreciate that and some people would not really appreciate that. You know what I mean? So like, it's something that I've been discovering throughout real estate, the limited time that I've been in it. But you're completely right. You can't learn in a book how to sell. You can learn like strategies and like ways to help discover what's going to work for you, right? Like I'm reading a book called Millionaire Real Estate Agent by Gary Keller right now. It's a really interesting book, and it sort of dives into yourself more than it does selling strategy. What is your why is a big part of the book. Like why do you want to be a real estate agent? Why are you doing this? Why? It's a very simple question, but have you ever really thought like, why? You know what I mean? And it made me start to think a little bit more like, oh, well, why am I doing this? Like, I thought I know why, but is that really why? Like, I've been saying why a lot.
And that why, I'm sure, will evolve over time as well. It did
exactly.
For me. It certainly did. My why I was doing this when I first started was because I hated my job and I wanted to do something different. Mm-hmm. And then when I actually started to learn what I was doing and how to do it really well, the why became because I want to help others, right? This is a complicated world.
Exactly.
It's a very important thing to know how to do well. And, I want to help guide people through.
Well, it was funny. It's great about this podcast as well, because just talking to people like you and 53 other people plus that I've talked to throughout this podcast is I've unlocked things just from talking, you know what I mean, from myself on how to handle different things and how to run my business and how to, better myself as a person. So it's what's really interesting, I was talking to another realtor the other day who has been a realtor for a little while, but they always like hated cold calling, right? All of their leads were coming from, you know, inner circle, you know, sphere of influence, you know, whatever, like people that they know. And I was telling her, and I'm just like, what do you like to do? You know, what do you like to do? She's like, well, I mean, like, do you like to help people? She's like, of course, I love to help people. I'm like, don't think that you're calling this for sale by owner because you want to make a commission. Think about it. You're going to make them $500,000 richer when you sell their house for them. Think about it like that. That's how I think about it. Like, I want to help these people. If they're in a situation where they need to get rid of their house or they need to buy a house, that's why I'm there, to help them. And that's truly why I want to do it. I'm not making that up. You know
So
what I
you're
mean?
talking about relational rather than transactional.
Exactly.
That's exactly. It's all about relationships. All of it.
Exactly. I'm not doing this for a commission. I'm doing this because I want to help you. Truly, I want to make, you know, if you're selling your house, I want to help you get more money. And if you're buying a house, I want to help you settle down and make your life easier. You know what I mean? So it's a mindset thing. And then you see that with how when you can see how despairingly obvious a realtor is when they're not thinking like that, and they exist, and you can see it right away. There are people that exist that are like that. And it's very obvious. Once you know what you're looking for, it's very obvious of how they think behind closed doors or what's going on behind their head. And it is because they want to make a commission. And that's why they're helping you.
And if
I'm not
you
going to
don't
say,
have that, if you don't have that proper mindset, you know,
yes,
the barrier to entry in our world is fairly low, right? So let's say compared to becoming a doctor or something like that, right? So you can become a real estate agent or a loan officer fairly easily. When the rates were super low and the housing market was wildly open, right? There was a lot of real estate agents that got in to make quick money. It's a wrong reason, and loan officers as well. It's a wrong reason to do it. And so we're going to start to see a lot of people leave the industry, I think, and that's going to help us. That's for the better, right? There's a lot of people that got into this for the wrong reasons.
Precisely.
You know, as far as like clients go, make sure you talk to your loan officer and your agent to make sure that they're a good fit for you. You know, ask them those important questions about how they feel about their business, you know?
Yeah, exactly. Because sometimes somebody who's quick to the point, a realtor that's quick to the point, and just be like, this is how much you can sell your house for. This is what we need to do to get it sold. Let's do it. Sometimes it's better to work with somebody like that. You know what I mean? That's just the type of person you are, you know, but you're absolutely right. It's a relationships industry, and it's all about building trust and knowing the person that you want to work with.
Right.
But I want to get into a little bit more about mortgages here. So obviously right now, mortgage rates have gone up. They peaked out 7% a couple of months ago. They went down, and some people are saying they might go back up. I don't really know. I'm not a mortgage lender. That's why you guys exist. So, but first, I want to go into like the history. So let's say like I like to use the example, like my grandparents bought a house in like 1974, right? And the interest rates back then were 12%, right? Like,
but the house also cost them only 50 grand.
right. But I'm talking, actually it was 20.
Yeah, right.
But like in terms of the interest rates and whatnot, historically they're not insanely high. Is that a fair or a fair point to make?
Yeah, the answer to that question is yes. They were high up to I think they were up to 18% or maybe even a little bit higher at some point. So 6.25, you know, is 66% less.
Yeah, historically they're not insanely high. Obviously, a couple of years ago, you know, they were low, and that was great. A lot of people could afford houses, and it was great. But historically, right now, a 6%, 5 to 6% interest rate isn't anything crazy. And I think for a lot of people, it's a good thing because it may stop them from getting into something where they really couldn't afford it, and it may not have been a good financial decision for them as well. You know, even at a 2%, 3% interest rate. But let's get into the different types of loans, because a lot of people think, oh, I'm just going to go get a loan and buy a house and bada bing, bada boom. For some cases, that might be the case, you know, for people who have money. But, you know, let's talk about like the most basic type of mortgage, which is what I just talked about, a conventional loan. Can you just explain like in depth about what a conventional loan is and how it works?
Yeah, so there are many, 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 many different loan programs out there. When
Mhm.
you say a conventional conforming loan, that is usually something that will be purchased by Fannie Mae or Freddie Mac, right? So there's conforming and non, well, there's qualified mortgages and non-qualified mortgages, right? So a non-qualified mortgage essentially just means that it doesn't fit into the box of Fannie Mae or Freddie Mac, which are the conservators uh, from FHFA, and they're going to be the ones that are going to buy all of these mortgages from the lenders, right? And so they are essentially providing us with capital in order to continue to do our business as well. And so when they buy a loan, it has to fit their guidelines, right? So a conventional, there are things called matrices or a matrix per program. So Fannie Mae and Freddie Mac have their matrix. It's, I think there's 26 or 28 different qualifying factors, right? Is it a single family home, multi-unit, townhouse, or condo? Is it going to be owner occupied, a second home, or an investment property? Is it going to be X amount of dollars, right? I think 726,200 is the new conforming maximum. Once you get above that from an amount being borrowed, you get into a jumbo loan. So that can also vary by state. So they have high balance conforming loans. So like New York is very expensive. New Jersey is very expensive. There are some homes that if you borrow more than that 726 number, it's still a conforming loan. It's just high balance. So there are many different ways to look at the different loan programs. Whenever somebody applies with me and they say, okay, I'd like to buy a home loan, I plug in all of their information, and then I click a button that essentially shows me 200 different options, right? But it organizes them usually by interest rate of which one is the best for, or which three are the best for this particular client based on what I've entered into the system, right? And so that's kind of how that works. Conventional mortgages are what you could consider more, I don't want to say private because it's not a private loan by any means, but you qualify on your own, right? It's not subsidized by the government in any sort of way. Qualifications are usually a little bit stronger, right? They want you to have a 700 score or better. They do have, you can get a loan with a credit score of 620, right? But the terms are going to be terrible. If you have lower credit scores, that's usually where people turn towards government loans. They will allow you for lower down payment, lower credit scores, maybe some derogatory credit history, late payments, whatever it may be. So conventional loans are a bit more strict. Usually they have less fees. So in order to use a government loan, because they're subsidized, you have to contribute to that slush fund, right? So the FHA has an upfront mortgage insurance premium. It's a certain percentage of however much you're borrowing. Under the VA, unless you have some sort of a service-connected disability, you will have to pay a funding fee, right? And so that is usually on top of your closing costs or prepaids for taxes and insurance and that sort of thing. And of course, any down payment that you may be putting on. So whenever I look at clients, I usually start off with either a private investor and put them next to a conforming loan, right? And then I'll throw an FHA on the side. And I usually look at these three options. And usually private investor, one or two of those, or a conventional loan are the better options. Just because of the cost structure, the interest rate, usually the mortgage insurance is a lot less or non-existent. And so those things are usually the reason why I would start off with plan A on a conventional, and then plan B would be the fallback on FHA.
Yeah, absolutely. Yeah. A few weeks ago, I went into a class and learned a little bit about FHA loans and what's going on with that and who it might benefit. So that FHA is something that a lot of people, I feel like, don't really know about unless they're really looking for a house or refinancing or something like that. But let's go into an adjustable rate mortgage, which I find are very interesting. So can you explain what an adjustable rate mortgage is and how they work?
Yeah, so an adjustable rate mortgage is just as it sounds. It's a mortgage that you have that has a rate that will adjust after a certain period of time. And so we, at my company, we do what's called a hybrid ARM, adjustable rate mortgage. And hybrid is because it's normally fixed for a certain period of time, right? So we have a 3, 5, 7, or a 10 hybrid arm. And so it's fixed for the first 3, 5, 7, or 10 years. And then at that point, it either adjusts every 6 months or every year, depending on the program that's chosen. And there are limitations to it. There's normally like, a 5-point maximum, right? So if you have an adjustable rate mortgage, you would say, let's say interest rate is 6%, whatever it may be, right? In your ceiling, which is one of the numbers when you get an ARM, would be a 5. So you do 6 plus 5 is 11, right? So that's the most it could ever go, right? It's capped at that point. And it's not going to jump to 11 your first year. There's yearly ceilings on these things, or yearly caps. Usually it's 1% or 2%. And so it will slowly inch up, but only if the index that it's tracking increases. So most ARMs will track up and also down. So if you're getting an adjustable rate mortgage, you definitely want to ask your lender, if the interest rates decrease for any reason, does it also decrease my adjustable rate mortgage? Because some lenders will, say, okay, here's your fixed period. And then as interest rates start to climb, it follows that. If the mortgage rates drop, they may not drop you. You may just be stagnant, right? So it goes back. It's almost like you're raising the bar, raising your ceiling, and it just kind of stays flat.
So why would somebody why would somebody get an adjustable rate mortgage over a conventional or FHA?
So typically adjustable rate mortgages have a much lower rate, right? So we are I don't want to say pushing, wrong word. We are advertising adjustable rate mortgages right now because the idea is that, generally speaking, interest rates are probably going to fall, right? So if you get a 30-year fixed interest rate right now at 6.25%, you can refinance that, right? Or you can do a 5-year ARM at 4.5%, right? So you're still fixed at 4.5 for 5 years. And if interest rates start to fall, then your interest rate will fall with the adjustable rate mortgage anyway. If they don't fall, then you have a really good interest rate. If they start to climb, then you would want to refinance out of that thing, right? So they're usually for short-term periods. You're essentially betting on the market. If you know that you're going to move in 5 years, or if you're going to, sell your house and do something like that, you're transferring companies, moving out of state, you're downsizing, whatever it may be. If you have a plan within that certain time period where you're going to exit that loan for some reason, that's a really good thing to have, because you can benefit with that lower interest rate. If you don't want the full risk of an adjustable rate mortgage, there's something called a buy down, right? So you can take your 30-year fixed loan. If you're purchasing a home and interest rate is 6.25%, throwing a number in the air, if you can get the seller to pay your buy down costs, then you can go as low as 3% for the first year. So a buy down would work where the seller pays your closing your cost to buy down. There's a certain calculator we can use to figure out the cost. They would pay for that, and you would get a 3-2-1 buy down. So in year number 1, you're at 3.25%. Year number 2, you're at 4.25. Year number 3, you're at 5.25, and then 4 and beyond, you're at that 6.25 note rate. So you can kind of play these. I don't say play the games, but they're creative financing ways, right? With the adjustable rate, you have to have a plan. What's going to happen when it starts to adjust? What do you think the market's going to look like? If you're not going to get out of that loan, then you have to have a plan to deal with the increase, when the time comes.
Cool. Well, I got a couple more questions for you.
Yeah.
This question is pretty general, but what do you feel is the biggest misconception on the mortgage side when it comes to buying a house?
How much it costs?
Yep.
There's a lot of costs that go into simply getting into the home, getting the mortgage, and then taking care of the house. When a mortgage company qualifies you and says, okay, you are able to buy a $500,000 house, right? We will go off of your gross income. So if you make $100,000 a year, that's $8,333 per month of gross income, right? And then we don't do any sort of net calculation. So if you're contributing to your 401k, your gasoline, your groceries, your utilities, your oil bill, your vacations, whatever you want to do, all of that stuff, your Netflix, that comes out of that usable income. Not to mention, we're not looking at payroll taxes, any sort of health insurance, things like that. So your $8,333, your $100,000 a year job that we're using to qualify you is actually going to be much less in usable income. So we're going to qualify you based on the mortgage world for more than you can actually afford. Just being completely clear, right? So you want to look at the numbers, right? You want to make sure that your mortgage payment of $3,000 a month, which fits into our guidelines, is comfortable for you, right? If the water heater breaks, if you need to replace the siding, if your insurance on the house, let's say we have a hurricane and your house portion, a tree falls on your house or whatever, most insurance companies are implementing a hurricane deductible of somewhere between 2 and 5% of the replacement cost of your home. Depending on how much house you're buying, that can be $10, $20, $30,000 that you have to come up with to repair your house, right? So these are things that you have to think about beyond the mortgage itself.
Mm-hmm.
Absolutely.
So
that's the most misunderstood thing. It's not just about that bottom line number. Okay, I'm paying $2,000 in rent. I can afford $2,250 on a mortgage, right? And own the house. It feels great. That's awesome. You have to make sure that you have that expendable income, right? So you're already talking about an increase, but now you're paying for, let's say you're moving from a house or an apartment. You have to pay for your own electricity on a much bigger home. You have to heat that home, right? If you're starting a family and you're introducing children to this, this thing that you're trying to do, daycare, diapers, insanely expensive, right? Plan ahead for these things, and make sure that you are able to afford things above and beyond that number. You have to think of it kind of as a business. I deal with a lot of investors, and one of the things that they do is, capital expense, right? So if you're making $3,000 a month on a rental unit and your mortgage costs you $2,500, you've got a $500 cushion, right? But you're going to be putting away 10% for capital expenses. You're going to put 10% away for vacancy, 5% for management, So there are things that you have to do similar to that when you purchase a home. Every 10, 20 years, you're going to want to look into replacing things on your house. The water heater goes, the water softening system is going to, crap out. My attic furnace that heats my upstairs has been on the fritz for 2 years. I've been throwing money at the stupid thing. I know I'm going to have to replace it. It's going to cost me $8,000, right? So these are things that are really going to go into home ownership. I don't want to deter anybody from it. I think it's a wonderful thing. It's a great way to build, generational wealth if you handle it the right way. But you have to be able and willing to afford these expenses that come along with it. It's a very big jump from moving from like an apartment to a house. The lawn needs to be cut. Now are you driving farther to work? It's little things that you don't think of.
Absolutely. Yeah. So the final question I have for you, and I ask this question on every podcast. Well, first of all, it's been a great conversation, and I appreciate you coming on. So this final question is, if you were to leave one piece of advice to the listener, what would that advice be?
Always ask questions. Absolutely, always ask questions. Say yes to everything. Nobody got anywhere by saying no, right? You say no to everything, then you're always going to be in the dark. You're going to be sitting on your couch doing nothing. Don't put yourself at crazy risk, but always give yourself the opportunity to try and do that sort of thing. And then always ask questions. I see a lot of people that sit on the sidelines because, they're either saying, I don't understand enough about it, or I'll do it tomorrow or whatever. Ask questions, learn about something that you want to do, and you'll be so surprised where it takes you.
Absolutely. Well, thank you for that great advice. It's been a pleasure talking to you, learning about meteorology and the back end, and then getting into mortgages. So, a great, interesting conversation. So thank you so much for coming on.
Yeah, you're very welcome. Thanks for having me.
Absolutely. And for anybody listening and really loves this podcast and you want to get episodes weeks in advance, and after, before they're posted on widely available platforms, you can get early access to episodes for as little as $3 a month on Patreon. So definitely think about subscribing. And if you're really feeling nice and you really want to support the podcast, you can pay up to $10 a month. And make sure to follow Knowledge is Power on Instagram, and look up John. You're on Facebook, Instagram, all that stuff too.
All over the place.
All right. So I'm sure if you just search his name, you can see it there in the bottom corner, and it's going to be in the title of the podcast. Search him up, follow him, and send him emails and ask him questions if you're interested in buying a house. So Thank you, John, again. Thank you all for listening, and I will catch you in the next one.